What's good, YouTube, man? I'm back with another one, man. I want to show y'all this trade that we caught on Friday on NVIDIA, and we caught 216%. Really fun trade. What I was targeting on Friday was the daily gap close right there, 207.76. The daily was looking like it was pretty bullish to me because we had an inside candle on the day. Inside candles are one candles. We had a two up inside candle, two up bullish reversal. We had great support right off in here, daily support. We found like a little bottom, and they were holding pretty well. They were holding that 190 like strong. And then once we was holding this bottom half, this 200 right here. Let's do this. Let's move it up. We had support right here, broke down resistance, got back above it right here, and this is support. Look at how this one candle bounced off of this 199 right here, this 200 going back to the upside. So when you see a long wick at the bottom, that means the bulls are winning. It was such a beautiful try. I just knew like, okay, nothing's guaranteed in the market. I don't want to speak in guarantees, all right? But inside candles, we play breaks to the upside or the downside. I knew right here we had a daily gap fill right there. Let's go to the fair value. You got close right here, and as you can see, we hit that. And once we closed it, I mean, I was really just targeting that. At this close, I was already up 216%. My position, I think those contracts end up going for over 500%. Like if I would have held, it actually ran almost another $4. I'm sorry. So it went from my target being hit at 207 to 210. And them contracts paid nice. This daily gap fill, it was beautiful. I was literally just waiting for this to be broken to the upside. My call entry right here on the daily. We were down here and we caught it. It broke the call entry on the daily. And then I marked the pre-market high and I marked the pre-market low. So let's go and do that. I have marked this as a gap fill to be hit on this target at 207.64. The entry for calls is at 204. And let's go down to smaller time frame to see the pre-market highs and the pre-market lows, because I always mark that. This is stuff that I do before the market opens. Right here, go to sessions, go to extended hours. You have to go on a lower time frame. I think you got to be like around, you got to be under an hour chart to see the pre-market high and pre-market low. I turn on my pre-market levels indicator, and all the pre-market highs and pre-market lows is just the London session. That's all it is. So I marked it pre-market low, pre-market high. All right, let's turn off the extended hours. Go back to regular session. All right, so I got in early on this too. In the group, I signaled this in the group. I mean, this was on point. We had this 3 candle right here on the 5 minute, right at the open. Boom. I'm like, all right, bet. We broke above this, came back in just a little bit. I got us in right here because I was like, pretty much my low. I was like, as long as you don't take out the low of this 3 candle right here, as long as you don't take out that low, which is at 201, I'm good. I'm in calls. We broke it. I was just waiting to see if we was going to support above that 204. And I was banking on this 3 candle not being taken out on the low. We got in, we were up right here, and then they rejected. They gave a fill 2 up on the 5 minute. I told them, I said, hey, I'm banking on the pre-market highs to hold as support, which is right here at 202. I told them, I was like, 202 should definitely hold as support. They tried to attempt to come down here. They didn't even touch it. They just kept taking off. I knew that they was trying to go back to the upside because we came back with a fill 2 down right here on this candle. So we had a fill 2 down right here on this candle, that's bullish. We had a fill 2 up right here. So I was like, okay, we might have to sit and draw down a little bit. But I told them, I said, if we start to bounce up, I'm probably going to add to my contract. So I got like a little starter position. Let me bring in the VWAP. We were above the VWAP. And then once this candle right here, this 35-minute candle closed above it, I told them, I said, hey, look, stock is going to take off because I think it wants to go get that gap fill to the upside. The thing that I noticed too right away, we were right at up ADR. We was trying to go target that as well. I'm going to always try to target the up ADR, which is the average daily range. That's a tool that I use to just get different levels, extra levels that I want to see. We got to get above the ADR and then hold the support. Well, we got above the ADR. As you can see, we didn't even come back and touch it. The ADR is right here. This is my ADR indicator, this whole little line right here. That's my ADR. I thought it was going to come down, touch it, and tag it as support, but we just took off. They pretty much created a base like right here. This was a support line, but it just wouldn't break. They just wouldn't break it. And then they really took off again. But the ultimate target was 207. When you're above the VWAP like this, to me, I'm going to always be in calls. This is on a 5-minute time frame. When I turn on the EMAs, just look how we were above. We're above the 9, and they just, all they did was a beautiful bull flag. And they played in this area, and you use the EMAs as support. I knew I could have stayed in some runners, but I scaled out along the way. This counter right here was the counter that had me so confident. When you break to the upside of the 3, this is what had me bullish. We not only had a call entry on the daily right here, right? We triggered it, came back in. I'm like, okay, don't panic. I was just banging on the EMAs and the pre-market highs to hold its support. So I just wanted to be in early because sometimes these stocks, they just take off. Let me go ahead and get a starter position just in case if it just take off without me. The pullbacks really don't scare me. As long as you don't break the structure, I'm not really worried. As you can see, we only had to go through one candle drawdown. This is on a 5-minute, and then we came right back with a filter down immediately. They took it out. The break of this high right here, I told people, I said, you still got a chance to get in, even right here. Let me delete all of that. Let me delete this. The break of this filter down, this candle, the break of the high, and let's go ahead and highlight this so y'all can see it. And let's turn off the ADR indicator. I told them, I said, the break of this high. Oh, let's go back. Okay. And this is such a fun trade, I'm telling you. And it happened fast too. I like them fast, especially on Friday, because we hit, man, I'm out of there. Like, yo, we had this filter down right here. So I said, if you still want to get in the break of this high, you might want to get some calls if you haven't already got in. That's what I was telling my group. Boom, we broke it, came above it, triggered it, came back, broke above that, and was out of there. And I was scaling out multiple contracts. Like I said, I always scale out 20%, 30%, 40%, 50%. I just kept scaling out. And the last one, my highest contract, it got to 216%. And I was done for the day. And I was literally just going for gap fill. They came up here, closed the gap right here at 10 a.m. They literally ran past it. I got out right here at 207.64. And if you just wanted to stay in the trade, you definitely could have just by using your EMAs. The 20 EMA is like an anchor for me and the VWAP. As long as you're above those, the pullback into those is just support most of the time. Now, unless you lose support of those EMAs, and you start to just lose it and then come back as resistance, then it's going to flip bearish. But as long as it's holding support, it's bullish the whole time. What strike price did I have on those? I think I called 205. Yeah, I had 205 call. And man, it was beautiful, beautiful, beautiful. But this was the trade breakdown. But let's go to look at the 10 minutes. Just peep at the 10 minute. This 10 minutes. Oh, look at that bull flag. Jesus. Oh man, that was nice. So this gave you a filter down right here on the 10 minute off that VWAP. Look how that VWAP was holding support off the 9. It came through that 9 EMA on the 10 minute a little bit, but that VWAP held that support right here, right there. You see right here, as soon as it broke the high, of this counter right there, oh, out of there. So that's on the 10 minute time frame. Let's look at the 15. Okay, so it gave a 3 count on the 15. Yeah, and I'm telling you something. When you want to see a strong trend, go to the EMAs on the 15-minute time frame. Just look at this 20 EMA right here, this red line, and look at the 9 EMA. As long as they holding that 9 like that, that 20 is super strong. When they touch that 20 EMA, I usually try to get in for calls when I see it pushing up off the 20 EMA on the 15-minute time frame. because when it touches it, it goes crazy. At the open, it was sitting right on it, and it had this 3 candle right here. It came through it a little bit, got back above it, and didn't touch the 20 EMA all day on the 15-minute time frame. Did not touch it. Those EMAs change on different time frames. Let's go to the hour. That first hour was so bullish. This right here, 3 candle. Boom. It was just a bullish day. Great day. I always like to mark the high and the low of the first 5-minute candle to show me a range as far as the open range breakout. Like if we're gonna be above this right here, because I want to point this out. Let's clone it. So notice, okay, this is what we call an open range breakout on a 5-minute. Delete the pre-market high and delete the pre-market low. I have clean charts for y'all. This is another one of the techniques that I use, which a lot of people on YouTube, you see, you're just getting into trading. If you're new, you have a 15-minute open range breakout that you can track. You got a 5-minute open range breakout that you can track. You can do the 30 minutes open range breakout. So basically, whatever time frame, you can just mark that the high and the low. And as you see, we never took out this low. This was the first 5-minute candle right here, first 5-minute candle, and we never took out the low the whole day. This was the lowest point of the day. Why would you be in puts if you never broke this low at 201.92? Once we get above this top area of 204.40 cents, you know, okay, we got above it. We got above it. Held a support right here, out of there. So you know to be in calls. Use your EMAs and your VWAP. Yeah, I mean, there's another way that you can connect this right here to know when the trend is starting to break. Connect the lower lows. Higher high, higher low. Higher high, higher low. Higher high, higher low. Start to break, and it just chops sideways from that point. It just chops sideways. But great trade. And our group, we're going to be locked in, locked and loaded, SPX Blueprint all day, man. Click the link in the bio if you want to join the Discord. And please like, comment, and subscribe. Please share this video. It would be helpful trying to grow this channel. See y'all in the next video. Peace.